You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host as always. This week we're going to do an update on the apartment market, and specifically we're speaking to my favourite apartment-focused sales agent in Western Australia. It's Richard Self from Mac Hall. But before we do that, I wanted to provide a quick update on the market. We've, as we know, passed through 3,000 properties. It's a mental barrier, but it's one that still doesn't really mean much when it comes to the level of undersupply we're still experiencing every week. We have a couple of weeks of land supply in the whole state when we think about the demand versus supply relationship there, and it's still very hard, very expensive to be able to bring that on. Apartments, obviously, and we'll speak about that today with regards to new supply, but still very much only a couple of cranes in the sky across Western Australia right now. And interest rates obviously have popped up, making it that little bit harder for people to be able to purchase and afford where the market is at right now based on demand supply. Still not a market breaking factor, but certainly a little bit of a limiter on the amount of growth we might see this year compared to what it was looking like a couple of weeks ago. The Iran war still smashes on, still affecting us at the Bowser, probably affecting the car salesman more than the real estate salesman right now, but absolutely noise. And when you have noise like tariffs, like elections, creates a little bit of stasis in the short term, which means it's probably the perfect time as an opportunity if you do believe in the fundamentals of this market as an owner-occupier, an upgrader, a downsizer, an investor, that these are the times where you jump in when people are a little bit hesitant, despite the fact the fundamentals absolutely haven't changed in this market. And those fundamentals I wanted to speak about, and we've luckily been able to get the number one guy in WA to talk about, is the apartment space, because it's been a little bit of time, and I want to get a bit of an understanding as how that lack of new supply and the constant demand from the affordability space is impacting our apartment market. Rich, thanks so much for coming back on, mate.
Mate, thanks for having me again. Absolute pleasure.
Bit of a preamble there. I didn't expect it to be that long, but it often is. Let's get focused, if we can, on what's happening in that apartment space. The guys who listen every week will certainly know Richard Self and certainly understand that you're the man to speak to when it comes to apartment sales in WA. How's your life been since the last time you were in, which was October 24? We're nearly up to 18 months.
Yeah, it's been a while, but it's been fast and furious. It hasn't really slowed down since last time we spoke.
What does that mean with regards to the amount of transactions happening in West Perth, for example, the buyer profile, the seller profile? We'll go through all that today, price points.
Yep. If
we have a listen back to our last episode in October 24, the median price we'd just broken through, hadn't we?
Yeah, the median unit price was around 580,000. So when I checked it out before coming today, it's 714,000 now for a median unit in West Perth.
Yeah, there you go. In 18 months, we're seeing that material change start to occur, right?
Yeah, and it makes sense because the most common property in West Perth is a two-bedroom apartment. And when all the two bedrooms are now selling in the 700s, essentially, the median price has really gathered momentum and it's at a new record high again.
Has that change in price point started to augment the change in people coming through your door? Or is it the same people just having to stretch further? Or a bit of both?
A bit of both, but now that the two bedrooms are starting from 700, two bed, two bath, your typical sort of property, we're definitely seeing less first home buyers. And if there are first home buyers, it's with some parental assistance, and it is definitely with the 5% deposit scheme. And there is a lot of downsizers, local investors buying for their kids to get in early because the fear that the prices won't be there in 5 years' time, that might be priced out. So the thought is buy for the kids before they go to university and they're not even finished high school yet. So that's one demographic that's emerging as well, as local tenants still buying property.
Oh, okay. So you're talking local tenants making that move from being a renter.
Absolutely.
And this is an interesting point, that the apartment space, especially the used apartment space, the established apartment space, is that first step, that portal, and represents the story of a lot of the market when it comes to making that transition out of the rental space. A lot of the people these days, when you think about affordability and what they've come from, which is trying to say out of a baseline of $10,000, $20,000, $30,000 for a lot of people coming out of school with their first job, still paying rent, which is $600 to $800 a week for most people in that space, you're probably not making that first move into their $1.5 million place in Junedana. It's probably an apartment these days for a lot of people who weren't able to get on the boat or missed the boat 4 or 5 years ago. So you'd see a lot of those people, wouldn't you?
Absolutely. They've had to recalibrate what they're going to start with. Wasn't that many years ago for $700,000-800,000 you could buy a pretty decent house on a reasonable sized block. So the bottom end has definitely been crunched from all sides. You've got the first home buyers pushing up. You've got downsizers coming back down. You've got the investors. You've got local tenants. The bottom end of the market, it's the most affordable part of the market, is seeing all the buyer segments there.
Yeah, I think that's something we haven't really spoken too much about, is that augmenting of it. It's those guys who could have been our mates coming out of school, waited a little bit too long. And as you said, we're aspirational about buying the first home. One of the mates who bought his house first went and bought the big home. And then 4 or 5 years later, that guy who just didn't get there, maybe didn't have the risk profile, didn't save, was in uni a bit longer than everyone else, he's paying the same amount because he's got a similar income, he's saved a similar amount of money, but instead he's got the apartment.
That's right.
A bit of a kick in the nuts for a lot of people, isn't it? Do you think they've had to go on a journey of self-acceptance?
They might have, but there's really no other option now.
Yeah.
There's really not much under $700,000 that isn't an apartment. You know, barely getting a 2-bedroom villa in most inner suburbs for that amount of money now.
That talks to our first home buyers threshold, which I bet your market would benefit from massively if that threshold was updated. Still sitting at $500,000. Even in the apartment space, I'm assuming there's really nothing that you sell for less than $500,000 now.
Yeah, it's few and far between. There's only a handful of apartments or any property in the metro area for under $500,000 right now.
Yeah, so that is a huge barrier. When you think about selling at $700,000, it's about $25,000 in stamp duty. That's a couple of years savings for a lot of people at that level. Imagine if that threshold would get indexed to the median house price and everything you're selling at the median unit price in West Perth now became stamp duty free. I'm assuming your buyer pool would just go bang.
It would explode. Couple that with the 5% low deposit scheme from the government, it would absolutely explode.
Yeah, and I think people are going to sit there and go, oh, but that's going to make prices rise. Adding demand in that space does, but I've said this before, this isn't artificially propping up demand. This is allowing the existing demand, people who are renting now who would have liked to have bought already, who are ready to move out of home, who are ready to move out of that rental. It's actually letting them realize the demand that they've been sitting on for a while. So there might be a short term, I think, situation of adjustment in price just because demand will outweigh supply further for a short term. But in the long term, it allows people to actually move on with their life. And let's be honest, what is housing about? It is not really an investment. It's a basic need. It's shelter. And so if tax is getting in the way of people moving to the next chapter of their life, filtering through, moving in with their girlfriend, having their first baby, and the one thing that's in the way of it is stamp duty, come on. And you would be at the coalface of seeing that right now of so many people who want to buy your apartment that you're selling on the weekend. And the reason they can't is because they're $25,000 away in savings. That's stamp duty.
Yeah, no, you're absolutely right.
How cheap does it get in West Perth, though? What's the cheapest property I could buy in West Perth right now?
You would be at 227 Vincent Street in West Perth, right on the border of Leederville.
Main road.
Beatty Park.
Old flat.
Yep, 70s building, maybe 60s. And those one bedrooms now are starting in the low to mid 400s.
Yeah, and they would have been 200s pre-COVID, I assume.
And lower.
Yeah,
Cleaver Street just next to it pre-COVID was about from 120,000.
Wow.
That was where they got to.
It's crazy how it was only 6 years ago when we're talking about those numbers.
Yeah, and
it wasn't like we were talking about a generation ago.
Absolutely. Now you're barely getting in the street for 400 plus.
I'm assuming what that's doing is changing the face of West Perth. Obviously, it's still younger people. It's still some downsizers. There's still some investment stock and rentals. But you're just not seeing those super low socio-demographic outcomes anymore, are you?
Not at all.
They just can't afford it.
Yeah, there's nothing for them.
Yeah.
Yeah.
Let's talk about that journey with regards to what's going on a weekend for you. 6 months ago, if you can remember back to October 25, 5% schemes just come in. Market's still obviously as frothy as it is now. What was that weekend looking like for you? How many people will be walking through one of the apartment doors?
Okay, I got a good example for this one. In September, I appraised a one-bedroom property. Written appraisal, 450 to 470,000. We'll do offers from 449. Everything sounds reasonable. We may get in the higher 400s. That's where the one-bedrooms were in West Perth at the time. Definitely mid-400s. Owner said, look, I'm going on a trip. I'll be back in October. Let's just park it. I'll come back to you. We'll get it ready. He came back just before October, signed the paperwork. We did the first home open the first weekend in October at from 449,000.
So you just kept it as it was?
We kept it as it was, and we were absolutely overrun. There was over 120 people. There was more than 50 contract requests, which for us is a precursor to the offer. And I think we got to about 18 offers and just shut it down. The price escalated to where we were concerned about valuation, and it went for 116,000 over the asking price to a level that we hadn't seen in West Perth for a 25-year-old one-bedroom. That was the first weekend in October, and that then set the tone for pretty much the rest of the year.
And what does it look like now?
So the one-bedrooms are still in the high 500s.
So they've clipped on even further.
Yeah, They are. And I don't think there's been a sale over 600 yet for a one-bedroom. So that price happened really quickly. A lot of the first home buyer, the 5% deposit scheme, people were there and offering, but at a different price point, and they were getting pipped, and they're still getting pipped by the investors or people with deeper pockets that were searching for twos have gone back to ones. So even though that 5% deposit scheme caused a spike in prices and interest and offers and traffic, they're not the ones securing the properties necessarily.
And is it still the 100 people through the door? Is it 40? Is it 60?
No, it has dropped back a little bit. So even on the weekend, we had a more expensive two-bedroom. Offers were in the mid to high 800s. We had about 35 groups there, and some people sat back in the corner, and I looked over and they said to me, geez, I thought it was going to be quieter. And I think they were expecting, because of the war, interest rate talk, just the feeling that maybe things had slowed down or were going to slow down, and they were completely blown away.
This is my time.
Yeah, exactly. Think it's their time, and still that property sold for a record price in the building, but to a different group of demographics because of the price and because of lack of stock. They're buyers from Subiaco that can't secure an apartment there. They come to West Perth and go, geez, this is great.
So what you're saying is that prices are still moving, the buyers are still there.
Yep.
Obviously, we had that peak with the 5% scheme as essentially a marketing ploy on the property market that settled back to what is still a very strong space of 30. I mean, if you ever had 35 people in any house, you'd be really happy.
Yep.
And how many offers are you getting at that point?
5 or 6.
5 or 6. Still a great spot to be in, to be able to have a rational, pragmatic conversation to get the price where you need to be for the seller. You've covered the market at that point in time when you have 5 or 6 offers and you've done your job. But what you're saying is that instead of the rise in prices starting to diminish demand, it's just making people slide on their expectations. So you're just getting people from suburbs that would have otherwise been in Subi a year ago, they're now coming to see you.
Yep, that's right. Exactly right.
I guess that doesn't give a lot of salvation to young people looking at maybe this episode going, this might be it. This might be the place I should be looking.
Yeah, there isn't. And the other day, I did what you mentioned on your podcast a few months ago. I've searched metro area, how many properties under 500,000, and it's pretty bleak. Less than 20.
Why are people selling? If you're having a very honest conversation with them going, look, market is absolutely moving here. It's an affordability thing. People are sliding to this price point because it's what they can afford. We're still getting massive numbers coming through the door. If I'm having a chat with you, I'm going, thanks for the update, Rich. Give me a call in 3 months to let me know. Maybe it'll be 6 months, maybe it'll be a year, might be 2 years. We'll just keep our finger on the pulse, but I'm not going to miss out on this growth. So why are people selling?
I think different reasons, but it's hard to forecast that the market will keep running at this same pace. And it is optimal selling conditions right now. If you're a seller, you're going to be sold within a week or two with multiple offers for a premium price. That's great. In 5 or 6 months' time, and I think with the recent events, it showed that this might be an opportune time for buyers, in that there is more noise. There's rising interest rates, there's a war, and there seems to be rising stock levels. Even though it's slow, it is giving hope to buyers that maybe now's the time. So some sellers would be sitting there thinking, geez, is this the top?
I guess that's dependent on their risk profile. And those who are a little more risk averse would go, yeah, this sounds like a good time for me to cash my chips out and I'll be happy.
It's been a good run. I think let's move it on.
Do you see a lot of people who are selling stay in the suburb and upgrade, reinvest back into the suburb? Are they probably transitioning out to the Subis, your Shenton Parks, places like that?
Yeah, no, you're right. So a lot of these properties that were bought 5, 6, 7, 8, 10 years ago, they were first home buyers back then. They might have had it rented for a few years and renting somewhere else, but they're definitely upgrading. They're cashing in their first home and upgrading to a house where it might be green title, kids. That's part of the normal property journey.
It really reflects the chapter in their life.
Yeah, and I think if you're investors, you're looking at your stock that you're holding, which is 20 years, 25-year-old apartment or 15-year apartment, thinking it's been a good run now. We're back. We're making profit. Things are good. Let's take some money off the table.
So varying levels of that longer term investment strategy as well, that for a long time West Perth wasn't able to offer the exit strategy, was it?
It wasn't, because you'd potentially be in negative equity or making a huge loss.
You sell over 100 properties a year, and it's a great data source to be able to ask this question. How many of those properties, you mentioned valuation risk, how many of those properties are selling at a point where you're actually getting pushback from the valuer?
We're not now. I think the valuers are in tune with the market that they're in. They're speaking to other agents. They always ask the same questions. How many offers did you get? How long has it been on the market? And they can see that even if it falls into a higher risk category, they know the market's running, and we haven't had any problem with evaluation.
And that's really interesting, because you're seeing, as you said, some pretty significant price jumps. We've spoke on the podcast about the whole idea that a lot of the time suburbs don't grow in a linear way. They grow based on evidence-based new records. Someone sells a property, Richard sells that next 2x2 for 900 or the 1x1 for 600. Suddenly that's the new price that not only sellers expect, but buyers will come to.
Yeah.
No one wants to be the first to hit that record, but if it ever does happen, it sets a new benchmark a lot of the time, doesn't it?
It does. And so when the new year came about, I started back the second week of January. You're a bit uncertain. Maybe the market's cooled a little bit. Will the buyers still be there? So there was a property in Car Street, West Perth. There was one sold in October for $580,000, a 2x2. We brought ours on, identical, 4 doors away, same property. It's apples for apples, from $659,000.
That's pretty optimistic.
It is.
Yeah.
Yep, absolutely. And so that first home open, there was in excess of 130 people. It was a madhouse. People walking in, walking out. You actually couldn't move inside an 80 square metre property. And there was multiple offers, and we ended up selling for $773,000, which is $193,000 over the last sale, which was 4 months ago. Now, that price still stands today. I don't think there's any more premium on that right now, but that happened at the turn of the new year. Maybe it was the 3 weeks off. The market took a break, and all the buyers came out at once. There was less stock then. There was only around 2,000 listings, including land and everything else. I think it was just a bit of luck, a bit of timing.
Yeah, but it does set a benchmark, and it's the sort of thing that agents like yourself and people who are watching your numbers will use as evidence to get a listing, get expectations higher for a seller so they get their listing, but also they'll use that with the buyers when they come through the door as well and say, this one's all for that. We expect at least that.
Exactly. And then it set a new benchmark in the building, and then now the 3-bedroom just sold last month at mid-8s. So that was a new frontier for that building.
What about finance risk? Out of 100 sales, have any of them fallen over in the last year?
No.
So that's interesting as well, right? We're in this strange situation where we're seeing big price growth in every price point in Perth, and you'd expect that the most risk would be at the lower price points where every dollar counts, and LVRs are higher, as you're referencing as well, with the 5% deposit scheme being utilised. And it's surprising because we didn't see it like this in the last boom. As prices rose, people couldn't stretch to it, and we just saw finance declines everywhere because people just didn't have their act together. The banks weren't playing ball. And then we also saw a mortgagee in possession situation because people just couldn't pay their mortgage. It's a very unique situation we're in right now, Richard, where not only do we not have valuers pushing back, not only do we not have finance declines really across the board, we also don't have mortgagee in possession situation where people can't pay their mortgage. It has to speak to some level of strength in the arse of the market, the real downside, right? If there was weakness, we'd be seeing these numbers pick up.
We would. I think everyone always talks about how much money there is in WA. Maybe there's just that underpinning of parents or savings that we haven't really thought about. But I think it speaks to really the amount of education that's out there for first home buyers and people going to buy property. They really do. They listen to these podcasts and they get prepared. And when there's multiple offers, you are figuring out who the best finance conditions are. So I guess you're always choosing the cream of the crop that are super organised, missed out on 10 properties, or they're cash. And
how many are cash out of 100?
I'd say about 30%.
And are they real cash, or are they just not finance will take the gamble.
Yeah, not all real cash. So mainly still getting finance in some shape or form.
Yeah, and that also speaks to, there's 100 people out the door, I better put my foot forward even if I'm the highest price. I at least need to differentiate myself some way, and this is the last way I can. And it's not optimal for people, and it's not something you recommend on a daily basis to people, but with the best brokers in town, you can do it with confidence.
You can.
You got 130 people walking through the door. It means you have 129 disappointed people. What's the advice to those people who are probably still walking through your door in March, walking through less sexy doors 6 months later as prices keep moving and their income hasn't, and rates increase, so their capacity goes down? What's your advice to them?
Right now, you can always say, I'll get prepared and all the rest of it and get pre-approved. It's probably not about that. We often go back to the office on a Monday or Tuesday and we talk about the people that bought property, that are signed, that are out of the market now. Yeah. They're sitting there relaxed.
What was unique about those people?
Correct. And we often say that's how you buy property. They were on the front foot, asking about how you deal with your process. How do I make sure that I'm at the top of the list, and will you give me a call back? Is it a text message? Is it a call? Is it open? Is it offers? What is the process? And then they played ball. They were in the process and they knew exactly what was important to the seller. They often ask about settlement terms. We're flexible, which sometimes it comes down to that. And they weren't afraid to increase their first offer. When you go back to them and you have 10 or 15 offers, can't give them any indication. Most people will say, is it 10 or 20? The people that miss out are ones and twos and 2.5s and being fancy with 2,600. The people that buy property just go, bang, another 20,000.
I mean, let's be honest. Can you remember the last time that you sold a property that didn't have a counter offer?
No.
I think if you're a buyer at the moment, you need to be able to understand your top line affordability, whether it's cash or finance. Understand that when you put your offer in, sure, it may not be your best offer, but your best offer better come. Otherwise, don't bother. And that best offer probably has to be still materially higher than what you're hoping you can get it for.
Correct.
Because someone else is going to do it. Someone else is going to do it quickly. They'll be the lovable pest. They'll be the person that Richard's enamored by for the weekend going, oh, I love those guys. I'm so happy they're going to get this property. You have to be that person. You have to be the guy who's texting and he's happy to answer the call. He's going, yep, they're ready. They're such an easy customer to deal with in that sense from a buyer side. And I'm so happy to help these people. There's a human element to it as well, right?
Absolutely right. It is. People like dealing with people, and when you find your people and they communicate well, and you just know who's going to buy the property sometimes on the weekend.
Yeah.
They just have that feeling and the swagger about them.
Yeah, and I guess, look, at the end of the day, you're obviously pretty surprised sometimes with the prices you get.
Definitely still are. You go back to the office, you talk about it with the other guys, and you go, geez, they paid that. But then in 2 weeks, 3 weeks' time, it seems very reasonable.
What's the most expensive thing that you've sold recently in West Perth, or that anyone sold in West Perth?
Yep, the most expensive sale recently would be on Mount Street that we made, and it was just over $2 million. It was a 250 square metre, 2-storey apartment in a group of 6.
Nice.
With good views, not on the river side of the street, but with good views, corridors between the buildings, river, city, but really just blown away with the space. It wasn't really a downsize, and we found the right buyer for it in that they were coming from a massive house and bought a very big 2-storey apartment.
It was like a right size, was it?
It was a right size.
How old were the buyers?
In their 60s.
Yeah, okay. So active people who want to be about town but don't want to be really getting into a smaller space.
Correct. They actually did prefer to be in other suburbs, but those suburbs didn't offer that type of property.
Well, that's the thing about West Perth, isn't it? You've got North Perth, West Perth. You've got central West Perth where the business district is, and then you've got this pocket which is so beautiful on Mount Street, for example, where the views are unmatched in Australia, in my opinion.
Yeah, and you've got the number one tourist attraction or best place to walk in Perth, in Kings Park. You're still super connected to Subiaco and the city.
Are you going to get involved in any of the sales in Princess Margaret Hospital precinct? And is that impacting what's going on in West Perth and the established market?
I'd love to get involved if any developers are listening, but I think a few sellers have asked what that will bring for West Perth, and I just think it's connectivity, it's going to bring amenity, and it will bring new stock, which is going to be closer to West Perth than it is Subi, and that new stock is going to be expensive.
It has to be to get it up.
Exactly. So that will positively impact directly across the road into West Perth.
It drags prices up?
It absolutely will.
And I think one of the great things about this precinct is for so long, we've spoken about this in the last couple of episodes we've done about West Perth, is that West Perth often feels a bit sleepy, that it lacks a town centre. Whilst it does have a bit of a centre, it's not open on weekends. I think this is going to bring a bit of that. It's going to bring the buzz, the fresh young people, the coffee shops that are open on the weekends, some restaurants, some new work environment as well. And it will be a bridge between West Perth and Subiaco.
You're 100% correct. It will be.
It's still years away though, isn't it?
They haven't broken ground. They think they might have just released the lots of land for sale.
It's not a this decade thing, and that probably speaks to, if you're ever worried about the supply space in West Perth, really changing this decade, because I'm not seeing any more cranes in West Perth proper.
There isn't at all.
And that wasn't the case in the last boom, was it?
No, the last boom, just across the skyline, it was always in the 30s. They were commercial, they were resi, they were just, there was plenty of them, and there was a lot of supply that did come in the end, and it did throw things out of balance. But right now, and people ask, does this market still have legs? It definitely does, because the cost of replication is so high, and there is no supply coming to fix this. There is no real meaningful supply coming.
Your life 15 years ago in this space would have had a lot more representation and conversations with apartment developers, I would have thought. Talking to guys who are about to bring apartments to market. You've had to re-engineer that model, really, because you're not getting those calls, are you? They don't exist.
They don't exist. And a lot of them do it themselves now as well. They just don't need the real estate agents right now as much. And there are more specialist project marketers. But you would think they would speak to the locals, experts in those areas, to understand the buyer groups and what they require.
If they were going to be developing. And
exactly.
That's the problem.
Yeah, and they're just not. There's other sites or other things to do.
Are there sites in West Perth that, and I know the big developers listen to this, that you would go, mate, give me a call, there's some crackers here, and I promise you, I understand things are expensive to build now, but you'll get the prices if you develop here and you do this here. Is that there, or is it really all built out?
No, there are opportunities. I don't think the land is that expensive in West Perth in parts.
No, because the build cost's so high, so the residual land value for an apartment development is just so low because it just hasn't stacked up for so long.
You're right, but I think now it's probably a perfect time. I think there's more buyers that are coming from Subiaco that can't get what they want, and people are starting to see West Perth for what it is, with the sleepiness but the closeness to Kings Park, the city, still connected to Subi, the freeways. It offers a lot, but there are, I think, in that central part of West Perth, close to Kings Park Road and close to the Subiaco side, I think that there is some ripe sites for 14-storey or 12-storey buildings if they can.
Last question, and I ask this of everyone. If you had all the money in the world to spend in West Perth and it was for a place to live, where would it be? What would it be?
That's a good question. I think right now, having sold on Mount Street for around 20 years, I still think that Mount Street is by far the best place to live in West Perth. Yep. You can get a big property with a good view, and you can walk down the hill into the city and still feel connected, and you can walk to Subiaco, Kings Park. It really has everything.
One of the $10 million ones, or are you a little more humble than that?
No, a little more humble. Just something in the twos would be fine.
Richard Self from Mac Hall, thanks so much for coming in, mate. You are absolutely my favourite apartment sales agent to speak to about where the market's at. You have your finger on the pulse. And people, if you're listening and you're interested in the apartment space, call Richard. He'll give you that information specifically about the apartment space. And it doesn't even have to be West Perth, because understanding how apartments work, what's important, what makes them valuable, what makes them an egg, is homogenous across Perth, and this is the guy who understands it. So give him a call.
Thanks very much, Trent.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!